G'day folks, welcome back to Pete's Investing. It's another update for gold and silver, which have risen slightly since our last update, and the US dollar and Bitcoin have dropped since our last update. Our heat map here shows gold and silver and the US dollar have bullish on the monthly, Bitcoin being neutral. On the weekly, gold and Bitcoin are bearish with neutral on silver and the US dollar. And on the daily, gold and silver are bullish with the US dollar and Bitcoin bearish momentum. And also some other instruments for your reference, should you wish to pursue those separately. We look at trading in the direction of the higher time frame. So if you're trading on the daily, we trade on the direction of the weekly time frame. Or if you're trading on the hourly, we trade in the direction of the daily time frame. We enter the trade when the CCI 150 has a fresh breakout from the moving averages, and I'll go through some examples with you. And we close the trade when the CCI enters back into those moving averages. Also, just a reminder, press like and subscribe if you haven't already, and feel free to visit our Patreon page where we look at weekly bullish and bearish shares as well. So looking at gold first, we look at the monthly, and you can see there it's bullish. Our CCI is broken above on the moving averages, although notice we've got a bearish divergence between lower highs there on the CCI versus higher highs on the price. That's a bearish divergence, so we expect it to break to the downside. So far we're still getting you more bullish movement to the upside, but that could turn down any time, so just be aware of that. Just as a history back here, we did have a bearish divergence back here versus high highs on the price. It went off for a couple of years actually before actually pulling back eventually, so we always pay attention to these. So the monthly is poising for a potential reversal, but again we'd like to see it happen on the smaller time frames first. On the weekly, it's bearish. The CCI 150 is below the moving averages, but making a bit of a move to the upside. And notice as well, we had a bearish divergence here between those higher highs on the price and lower highs there on the CCI. It actually pulled back slightly. Again, it doesn't mean a full-scale reversal with these divergences. It just means a bit of a retrace at the very least. And here on the daily, we had another bearish divergence, and the CCI is still slightly falling off still. And as again, we had a bullish higher highs movement on the price chart versus lower highs on the CCI, and the price fell off. These diversions, by the way, are independent from each other. They don't always align. In this case, they look like they're aligning, but they're not always aligned in different time frames. If we look at the hourly chart, and I've got the daily here as a reference, we trade only in direction of the larger time frame. So in this case, if you're trading on the intraday, in this case we're using the hour chart as an example. So back here you would have taken short trades only from that was from the 23rd of May. And from the 23rd of May, that was back here. So let's look at that. So you can see there, that would have started back there. So you would have avoided taking short trades when the CCI, or the price is above the moving averages, but also when the CCI is rising, like in that point. But you would have taken some short trades during those little drops there. So not huge opportunities, but you can see there, you probably could have taken, if you're quick enough, you could have taken this long trade here. Another short trade there, another short trade there, another nice one there. And again, avoid going short when you see the CCI rising, like in this case back here. And you would have taken short trades when the CCI drops, like in that point there, that one there. Zoom in, that would have been a nice little trade. Close it out when the CCI breaks into the moving averages, or the price, whichever comes first. Another short trade. This one bounced off the moving averages a couple of times, and eventually you would have taken out your profits at that point there. Avoid going short. You might have taken a couple of short trades there, but that would have been a break even or a very small loss. At the moment, you would be going back from that point. So from the 3rd of July, so from this point, notice the CCI is dropping and the price is rising until that point. So you would have taken a long trade, and you'd still be in a trade today had you taken a long trade starting possibly from that point there. Now it was very narrow, but it broke above again, but you could have taken another long trade from that point as well, and you'd still be in a trade today on that one. Next we look at silver, and silver's got a similar story. It's bullish on the monthly. It was bullish on the weekly, but it's broken into the moving average band, so we'll consider that as a neutral. And on the daily, it broke down. Again, we saw this bearish divergence versus higher highs. It broke down. You would have gone short during that period. Actually, no, you wouldn't have gone short because you want to trade in the direction of the weekly. So you would not have taken short trades there. You would have taken the long trade at that point there. So at that point, it was going short, and then it started breaking to the upside on the daily. So now you start taking long trades on the intraday. So if we go to the hourly chart, at that point there, So you would have avoided going long until such time at that point there when it broke above, and you'd still be in a long trade now. So always trade in the direction of the CCI. Even though the price might still be rising, you trade in the direction of the CCI. And back here, beginning around the 24th of May, that was, where are we? 24th of May. Where am I? Can't find it. Here we go. Can't read the chart properly. There you go. So around similar to gold, you would have taken short trades in those little declines when the CCI was dropping in line with the price. And as I said today, you'd still be in a trade with a long position. Actually, you would have taken your profits because that's entered the moving average band. So you would have entered there and taken your profits there and waiting for another signal to go long. Or if the daily breaks to the downside, you would take short positions. Next, we look at the US dollar. Now, the US dollar is broken up on the monthly to a bullish momentum. On the weekly, it's neutral. It's broken within that very thin moving average band. And on the daily, it's broken below the moving average band and it's giving us a bearish signal. So only short trades to be taken on the intraday. Now, if we go to the hourly chart, again, starting from back there, based on the daily, you would have taken short trades from around the 2nd or 3rd of July. And the 2nd or 3rd of July, so you would have taken your first trade at that point there. You would have been in a trade. And if you're following you could have possibly taken your profits when the CCI broke into the moving average at that point, and then re-enter it once it broke below again. Close it out, take your little profits. Now this one went sideways, went long a bit, then it broke down again. So if you could do one of two things: take your profits with the CCI breaks above, and that's a wise thing to do. Or if you follow very carefully the moving averages on the price chart, you'd still be in a trade during that whole period. But again, just be careful. At the moment, we've got a bullish divergence. You can see there on the hourly, those lows are rising versus lower lows on the price. So that's a bullish divergence, which means the price may change to the upside any moment within the next few hours. So just be aware of that. Although on the daily, there's no sign yet of a reversal, but the hourly is showing you a move to the upside. So just be aware of that as well. So looking at Bitcoin, that was bullish for a number of months, and now it's finally broken into this moving average band on the monthly. So that's a neutral signal. On the weekly, it has been bearish for a number of months, and it's still bearish. It's fallen below the moving averages of the price chart as well. So only short trades to be taken on the daily if you're trading the daily. And on the daily, it's been bearish for a number of weeks now, and it's still falling, and no real sign of a pullback yet, although it's hit this support at 56,566. So that could be a critical point for it to reverse, but at the moment, still early days. I'd still be taking short trades only so long as the CCI is below the moving averages. On the hourly, again using the daily as a reference, you would have taken short trades from the 11th of June and going back to the 11th of June, back from here, this period. You're taking, again, when a CCI is dropping and so is the moving averages, or the price below the moving averages of the price, you would have taken short trades during those little drops there. Short trades, short trade. Again, probably avoid going short on that one. The CCI is breaking higher. So always follow the CCI carefully. That would have been a nice little trade to take. Avoid. Maybe a break even there. Another short trade there. That would have been a nice short trade to take. That's going sideways. Another little short trade, and you would have done nicely had you gone short during this more recent period. You would have probably taken some profits out there, but once it breaks below again, you open it up with another short position, close it out again, wait for it to break to the downside, another short position, or you can follow it on the price chart similar to what I said before. But again, always notice here it's broken above. Little false break, you would have taken it at the very least during this period when it broke above. Again, another short position there. Then it started breaking higher, so avoid short trades at the moment, even though the daily is short. The hourly is giving us a bullish momentum. Although you can see there it's starting to break to the downside, so that could be an opportunity to go short again in the next hour or two. So if you got value out of the video, hit the like and subscribe button. Don't forget to support us more on the Patreon page where we look at bullish and bearish shares. Thanks for watching and see you in the next video.